is Wednesday, June 5th. It's hard for me to even remember what day it is. I just came back from a vacation, some much needed time off. I hope all of you traded well during that time off. Our last live event was about 2 weeks ago. So back here on May 22nd. So I always like to start by recapping our trades. Harry will be joining me shortly. And you can see May 22nd, MSFT, Microsoft. That was my long pick of the live event. But there he is. Hey, Harry, how's it going?
Good, good. How are you?
Things are good. I am starting to get my head back in the game after taking some time off. So I've got my bearings.
I mean, I know how your trip was. Tell the audience how your trip was.
It was kind of a fishing trip from hell. It was traveling into the wilderness with a boat, 3,000-mile trip, round trip, and we had trailer problems. So broken axle, and we got that repaired, figured out a solution, and then had a new trailer, a different trailer, broke a spindle. So I'm glad to be home, quite honestly. It was rough, and there is not anything in the wilderness in terms of spare parts. But I will say one thing, the people of Upper Manitoba are phenomenal. I mean, they will do anything to help someone out who is in distress. So
sounds like you spend more time trying to MacGyver it than you did fishing.
Absolutely. So it was not very relaxing. And, almost hit a deer on the way home, with the new trailer, missed it by about 1.5 feet. So there was plenty of excitement the whole way. I'm glad to be back here. The markets aren't nearly as exciting as that trip was. So, Microsoft was my pick. And to set the table 2 weeks ago, we were waiting for the FOMC minutes, which were going to be coming out Wednesday. We were also waiting for Nvidia announcing earnings after the close. So both Harry and I were like, we've had a market that hasn't really gone anywhere, and we're waiting for news constantly. So let's wait to see how that news plays out, and then we'll be able to determine what the market direction is. Nvidia, certainly the more important of the two news releases. FOMC minutes didn't mean much because the FOMC has been out there with Fed speak almost on a daily basis. So we weren't expecting any surprises there, but we got this gap up to a new all-time high, and Nvidia did actually have a good earnings reaction, and it still looks good today. But you can see how these gaps up to a new relative high have often been faded. And actually, I'll show you that in the market, because there we'll be able to see it more clearly. That was a gap up to a new relative high, big sell-off, bearish engulfing candle. Same deal here. So when you see a move like that, you should be holding off on your long positions because you know that there's going to be some ensuing volatility. So we've been able to work off some of that selling pressure, and lo and behold, today we are kind of challenging that all-time high. Microsoft was not a good pick. Okay, flat out, not a good pick. And you can see that even though you should have gotten in the trade, it should have been recovering better than it has been. So it's weak relative to the market. I don't like it as much now as I did 2 weeks ago. Fortunately, Harry did give you a couple of great picks. And I'm going to put Google up because that was your pick.
Lilly, I picked Lilly, right?
You had Lilly because, Lilly, you said, if you want to get out of the tech sector a bit, right? We have been focusing on tech stocks. Lilly would be a good stock to look at. And here you can see May 23rd was where the live event took place, and it has performed very nicely. And you did like Google. That was, you liked it, but you liked it kind of under the premise that you would sell an out of the money bullish put spread.
And that would be doing quite well right now. That would,
yes.
That held up. I mean, because I remember looking at it here, and you had two nice levels of support. You have this gap up level of support here, where the gap, you can kind of look at the gap at 430, starting at 162.60. And then, of course, you have the 50 SMA, which is at 164.32. So, I mean, they were slightly different back when we gave it, but the idea is still the same here. So you had these two very nice gap levels of support that Google would have to break through. You had you had the FOMC coming out, but still, we were entering into a fairly dead period into the market. And in order for a stock like Google to break that level of support, those two major levels of support, you're going to have some sort of a catalyst to do it. So barring any news release that might impact Google, which of course, in any situation, any stock, any trade you make, that's always a possibility. It's more of a possibility with some stocks, like Boeing, for example. You can almost expect every 5 minutes a press release. But with Google, it was a fairly safe way to play that name and just get some of that passive income, let data burn away on your put credit spread.
And so right now we've had, a little bit of market volatility after this long red candle off of a new relative high. And so it's taken a while to work off some of the selling pressure, but the market is starting to creep a little bit higher. We had some economic news today. ISM services came in at 53.2, I believe it was. That was much better than expected. I believe 50.8 was expected. ISM service is a very important number. It's a survey, and I like it because it's current. Almost every economic data point that we get is old, it's stale, but this is actually a survey of what purchasing managers are doing right now. And so it's a current look at what's happening in the economy. And last month, ISM services dipped into contraction territory for the first time since December 22. And so having that nice little rebound today, I believe, is helping the market to move higher. And we'll go to the 5-minute chart. You can see this nice little rebound in here. And I'll ask you for your opinion on this too, Harry. But my opinion has always been we want strong economic growth. We want the Fed sidelined, meaning they don't have to cut rates. And we want inflation to come in. If we get those ingredients, we're going to have a really good backdrop for the market. And the problem with wishing for a Fed rate cut is that it is going to come on the heels of some economic weakness. And then that little sugar high, that bad news is good news, sugar high, will only last for a month or two. And then as the economic numbers start to deteriorate, then it's going to change to a fear that, gee, maybe the Fed waited too long. Now they're trying to play catch up and they're trying to stimulate economic growth. You don't want to be in that camp, at least not from my perspective. You want that strong economic growth. What is your sentiment on this?
Yeah, I mean, I look at it where, look, best case scenario is economy's going up and inflation's coming down, right? So you can kind of make it the 4 quads. Upper right-hand corner here is economy's going up and inflation's dropping. That is your sweet spot, best case scenario. Your worst case scenario, of course, is disinflation, where you have the economy is going down. The economy is not getting better jobs. Unemployment's rising, manufacturing's decreasing, etc., and inflation's going up, right? So that's your nightmare scenario, where you have the economy getting worse, but inflation's going up. Then you have the in-between kind of murky area, which is you get the economy going up and inflation going down. I'm sorry, you get the economy going down, but inflation going down. All right, that's a situation that's rate cut. That's your rate cut kind of zone, right? The economy's dropping, inflation's dropping. So now they can come in and justify rate cuts. Obviously, the economy doing well and inflation going up is a situation where they're not going to cut rates. They might actually, that's a raise rate situation where both are going up. Well, the economy's doing well. We can afford to raise rates here, and because inflation's still going up. So your two market sweet spots is, and I know it can get confusing, and you should really just follow price action. But if you're, it's almost impossible not to follow this, particularly when the market responds to these kind of news releases. Is the two things that the market would like to see is economy going up, inflation going down, or economy going down, inflation going down. Second one, rate cuts. First one, probably not going to get rate cuts, but you got a strong economy and lowering inflation. That's good for everyone. So right now, it's almost shifting every day. It seems to me, Pete, that on Monday you get bad economic numbers, and now all of a sudden bad news is bad news, and the market doesn't like it. Then today you get good economic numbers and good news is good news, and the market does like it. So it can flip back and forth. I agree with you. I think too much emphasis is placed on rate cuts. Not enough is placed on you have a strong economy. Economy's doing well. These companies are going to do well. These companies are going to do well. They're going to report good earnings. They report good earnings. Their stocks are going to move. That, to me, is the sign of a healthy market. Hopefully, eventually, we'll get out of this whole rate cut discussion one day.
Yeah, we've got some important news coming up Friday, obviously, the jobs report. And so what we'd like to see is the hourly wage component, for me, is the most important part of the jobs report right now. 0.2% is where it came in a month ago. That was excellent. That was a decline from, I believe, a 0.4% increase. Wages are the largest input cost for manufacturers, so you want to see hourly wages stabilize. They don't have to go down, but 0.2% is kind of that sweet spot for that. So we'll be looking for that. Job growth in the 175,000 range, I think, is also in the cards, just based on what we've seen from initial jobless claims the last 4 weeks. So I'm expecting a decent number. I'm expecting wage inflation to be probably 0.3% or so. That should be market neutral. And then I believe that the focus shifts almost instantly to the FOMC statement next week, a week from today. So, hey,
the CPI week.
Pardon me?
The CPI report next week.
Oh, it's CPI. Is the Fed not next week?
No, I think it's a CPI announcing next Wednesday at 5:30 a.m. Pacific.
Okay, well, I'll have to check on I know we've got an FOMC statement coming, so maybe we're 2 weeks off from that.
Maybe.
But hey,
obviously all eyes are going to be on that CPI. And your Spectre just put something in the chat room that you talked about, Pete. I agree with here, which is I remember back in the day, 2021, 2022, you could play future contracts after hours. That's how much the damn market moved. Like, wide swings. Remember that? Where you could play futures at 6 p.m. at night and still get a 10, 15 point move in the thing if you were following it. Now the market is really good in my eyes for swing trading. Less volatility intraday for day trading. Back then you had all this constant volatility in swings, which was great for day trading, but quite unpredictable for swing trading. So I think, the market has settled in. It's a lot, volume has dropped. The range is kind of consolidated. You don't get these huge swings. You don't wake up in the morning to a 50-point drop or a 50-point jump in the market. You're getting these kind of range-bound days where you can focus on individual stocks, but you're not getting that much help from the market. We have seen these last 20 minutes of each day, there's these huge kind of jumps, but basically it's kind of anemic in the market, which is good for swing trading, good for bullish put spreads, things like that.
Yep. And so we get the double whammy when we do our next live event. We do have CPI in the morning Wednesday, and we do have the FOMC statement that same day. Wow. So next Wednesday, make sure that you come in and see how we're positioning ourselves and what our thoughts are. I think that's going to be a very big news release. I do want to show you the buy and sell signals on SPY that we have in Option Stalker Pro. I've got it up on the screen right now. Look at that buy right there, and it's still long. So I want to make sure that I've got the full screen in, but you can see there's a great buy signal. There's your sell signal. So you get out here. I'm going to scroll back so you don't think I'm cherry picking in here. Beautiful. Where are you going to get signals like this? I challenge you to find better trade signals than this. And we can scroll all the way back and take a look at where all the signals came in. So if you wanted to keep your analysis simple, if you're a swing trader, just follow what you see on the chart here. You see a yellow sell signal, you want to favor the short side. You see a blue buy signal, you want to favor the long side. And there was a long stretch back in here where it was just on a very, look at that buy signal. It told you, get long and stay long. Ignore the little dips in here. Stay long. We're kind of in a similar
he's not talking about let's get long on SPY. He's saying if there's a buy signal there on SPY and you have stocks that are strong, have relative strength, hey, it looks like I can count on the market support pushing my relatively strong stock up. If you get a sell signal and you're long on some of these stocks, even though they have relative strength, that might be the time to take profit because the market might be starting to take a little bit of a breather, make a dip. And even though the stock's relatively strong, it's still going to get pulled back a bit. So, you know, these signals help you because for us, it's all about what is the market doing? What is the market going to do? And which stocks are doing it with it.
Exactly. We want to be riding the fastest horse always. And there are going to be times when you get a long red candle like this, a bearish engulfing candle there or there, when you decide, okay, I want to still sell out of the money bullish put spreads. I know that I'm going to have a little market volatility. I'll wait for support and then I'll sell them. And you get some volatility, wait for support, and then start selling your out of the money bullish put spreads. So yeah, technical analysis, price action is all you really need. All the fundamental news that comes out. It's good to know when these news releases are coming out because you can plan your trading around some of that volatility. So you know that, yeah, there's going to be a little added volatility on Friday because of the jobs report. There's going to be some Wednesday morning because of the CPI. We got the FOMC statement. So it does factor in, but you don't have to play junior analyst and try and figure out what all these numbers mean. Just follow price.
And I say this almost every time, but you know, I truly believe, look, obviously we're technical traders. Very rarely should, if ever, fundamentals go into your day or swing trades. I know there are very rare exceptions to that. However, there are certain stocks. I mean, I was asked in the chat room the other day, you know, should we still use SPY as your kind of cornerstone for relative strength when you're looking at a stock like Coin? And yes, you should. But it does bring up the question that there are certain stocks that technical analysis are going to be less effective for, right? So Boeing, for example, even Coin, where there are external factors that are going to come in and apply pressure, whether buying or selling pressure to a stock, that will nullify those levels of support and resistance easier. So, you know, all of technical analysis can be boiled down to correctly identifying the levels of support and resistance. That's all it is. Everything else, that all the indicators, everything is to better get a sense of levels of support and resistance, whether it's intraday, whether it's you know, long term, whatever, you know, time frame you're looking at, getting a sense of where that level is. Now, those levels become meaningful in so much as other traders and institutions follow those levels, right? If you have a level of support, you know, for example, Nvidia has probably some psychological resistance at 1200 here. Why? Because it's that round number of 1200. That isn't a strong level of resistance, but it's probably enough to maybe get a little bit of a pullback. However, there are other stocks that those levels are going to be dictated very much by external factors. So Coin, you get a huge drop in Bitcoin. It can blow through a level of support much easier than, let's say, a Google can, where it's going to take more, a lot more pressure to break those levels. So you just got to keep in mind that, yes, we follow SPY, we follow relative strength and weakness, but there are certain stocks, biotech stocks, for example. You get, you know, a lot of Seldon news on biotech stocks, things like that. can impact the strength of your technical analysis.
I had a question. Hey, are these green and red lines in 10SI a future feature? Yes, they are. We're working on all sorts of display enhancements for Option Stalker Pro. We have our intern Carter back in action, and we've got a whole punch list of things that we're going to be working on. So I'm excited to see some of the changes. I know what we're going to be working on. By the end of the summer, we should have some really cool stuff for you.
Got some questions here. They're both about earnings plays I did. I don't like answering the earnings questions on these broadcasts. The earnings plays that I do are separate. I do them with a slight edge. You know, it's kind of like you're counting cards at a casino. You're not guaranteed to win. Maybe you get a 55 to 45% edge. So if you play it often enough, you're going to come out ahead in that situation. And I only play earnings if I don't think it's a coin flip. The edge I get is through information that I'm able to get through JPM. So, you know, with that edge, I have a good record on playing earnings, but I do not recommend anyone else play those earnings because as much as I can share that information, I can't share it all, and you won't be able to have as informed a decision as I have in making those trades. So I'd rather, you know, I know people are asking about my Lulu trade for tonight, my MDB trade on the covered call. So I'd rather not. I can answer this question separately on Twitter if you know, send me a message. But let's keep this broadcast focused to relative strength, relative weakness, the right stocks to get, the market, etc.
Yes, some fundamental analysis gets very, very involved as well. And
It does.
I consider myself well versed in it, but you've got to have the inside information, and a lot of the large institutions spend billions of dollars. They have, if there's litigation, imagine they have people sitting in the courtroom evaluating where they think the jury is leaning. Well, I don't have that information.
Yep.
They do, and they've got big money behind it. They've got their ear to the wall. They know what Congress is doing. They've got satellite imaging of parking lots and shopping malls on Black Friday to see how many cars are there, on and on and on. That's the type of research that they have available that we don't. And so
even then, they sometimes get it wildly wrong. I remember just this last week where JPM was trying to tell me we're bullish on Dell going into earnings. And I didn't take the trade. I didn't do the trade. I didn't. It's not that I disagreed with their analysis. I didn't have a strong enough conviction behind their analysis. Sometimes you have to really read into the words of what they're saying to see just how strong their conviction is. But they got it wrong. And this is with probably a team of God knows how many people, reams and reams of information, all looking at it, all deciding, and they came to what I'm sure was a logical conclusion that yes, Dell will continue to go up after earnings, and they were wrong. They were just wrong on that. So it's not like, even with all of that, while they have a better track record than the average retail trader, and that's what they make their living off of, they are not infallible.
And, you know, they could have been spot on with what their number was, and Dell could have come out and beat just as they expected. It's just that the stock had run up before the earnings announcement, and it gave back some of those gains. So good news was priced in, perhaps not only by JPM, but Goldman Sachs and a few others, and there was an opportunity to take profits. So very, very difficult to play earnings. However, what we do following price action and technical analysis, we're able to hit 80, 85% of our trades, sometimes even higher. Why would you go into a crapshoot situation when you can do that on a regular basis?
Indeed. So let's see what we got here today. What do we?
I do have one question. Does OSP come in dark mode? Yes, it does. I don't switch between light and dark because then I have to adjust some of the other colors. Yes, you do have dark mode, and for live presentations and for my video recordings, the light mode seems to show up much better. And it also shows up much better for people who are viewing this on their mobile phones. Very difficult to see that contrast when you've got such a small display. So that's why I record in light mode.
So there's one trade I like here. I'm going to make it now. There we go. Just made it. So I like taking the 21. I just took profit in this position. I'm going back in this position. I like taking profit in the 21 calls for PLTR. I like that strong break today over the 50 SMA. It broke out of tight compression. I like the break over the downward sloping trend line here. That pretty much it started all the way back on April 4th. So you get a break yesterday of the SMA 100, stops at the SMA 50. Will it hold? Will it not? And then today it cleanly breaks through and consistently stays towards the high of the day all day today. So I like PLTR. I just took 10 contracts of the 21 strike calls expiring July 19th.
I like it. Looks nice. I should point out when you see the charts, you're also going to see some yellow and blue arrows. These are buy and sell signals. So you got to buy there, you've got to sell there, you got to buy there. So small loser, but overall some very nice gains in here. So as I'm flipping through charts, you'll see some of those different signals coming in. Buy signal there. Trying to make this easier for you. I've been spending a lot of time going through all of my 1OP indicators, ripping them apart, finding new ways to put them back together to give reliable buy and sell signals. So I think you're going to be pretty dang happy with what you see coming up. Hopefully release that in the next couple of weeks or so.
Well, I'm looking today. I mean, what I want people here to know is the one option chat room. Not only the insight you get every morning from Pete, from Spectre, into the market, but if you just go on any given day and scroll through the posted trades in that chat room, there is no place that you have a better collection of just throw a dart, hit any trade here. I just saw even going back back into Microsoft today. Microsoft, nice break of the 50 SMA. I see a long on that. I see a long right now on DLR into the trade. I see a long on coin. And if you look at the coin chart, that certainly is technically bullish. Just, looking through these trades here in this chat room, and then PLTR, of course. There's no place that you're going to find where if a trade is posted, and you obviously look it up and you look at the charts and all that, but that you can have confidence that that trade is following a very strict set of rules. Because if it isn't, it'll get knocked out really fast, and you won't see the trade there. So if you look through and you see these trades posted, these trades have hit a very high standard. To me, like, it is an indispensable trading resource, not just to soak up knowledge, but to really see what are people trading today, and knowing and having really good confidence that those trades are solid trades. I mean, Dave posts a trade and you can pretty much bank on the fact that that's one of the best trades out there. No place else can you get that type of, and plus you have my scathing wit on a daily basis. So.
Well, and the real proof is not that you can trade Harry or that I can trade. It's that the people that you see in the chat room have come in, they've put the time in, they've learned the system, they're honing their skills, they're keeping their trade logs, they're improving what they do. And then they're the ones who are posting all of the trades. They are the proof that this can be done. It's a great system to trade.
It really is. And it's, there's a lot out there, obviously, but, this is not a momentum-based trading. This is not hey, trade the first 30 minutes a day and then you're done. Anything that you see like that, is just full of crap. There's just no proof behind any of those things other than the proof that most of those people will lose money. So, I mean, look, we say it all the time. trading is probably simultaneously the most rewarding and the most difficult career path you can take, because you're taking a career path where your likelihood of success, just statistically, even if you follow all the right methods, is low, because there's a huge mindset gap between what it takes to be a successful trader and what it takes not to be, and the type of mindset that will basically doom you. But you get it right, and you follow everything, and you study it, and you do it for 2-3 years until you're ready to go out there. You now have a skill and a craft for life. Anytime you want, you can sit down with an internet connection and make money. And that is a level of financial independence and security. Because let me tell you this, nobody, and I mean nobody, ever got wealthy. No one ever got rich off of a salary. You're just not going to do it. You can make a salary, you can make a good salary, you can make 500 grand a year. So no one ever got wealthy off a salary. You get wealthy owning your own business. You get wealthy being financially independent and controlling your own destiny. You do not get wealthy filling out a W-2 form.
I have a pick. I like Qualcomm. And I like this little compression here. I like this little breakout. You can see how the stock had a nice, strong move higher, got a little bit ahead of itself. It pulled back. And if you look at what the market has done, you can see this fairly substantial dip that took place over the course of the last 2 weeks. What did Qualcomm do? It held its own. And now that the market's starting to move higher, it's getting back above this little compression here. I believe it's going to continue to grind higher. It's got relative strength. It's got all the ingredients it needs. It's rested after a nice move higher. It's caught up to the EMA 8. So this would be a longer term position that I would look to take. And I am trading in a very small account, but kind of dipping my toes back in the water. It's nothing that I have to be preoccupied with, but I did buy some calls, some July calls, the 200s on Qualcomm, normal expiration. And I think I paid like $14.25 for them today. Yes.
I like Qualcomm.
So I think that's just a long term. I'm expecting it to grind higher. I love this strength right here and the fact that it's taken a little bit of a pause. I don't feel like I'm chasing anything in here. If the market breaks out to a new high, the stock should perform well. If the market waffles around, the stock is probably just going to hold its own. And then I have the historical IV up. You can see that that's at 30. Anything below 30, you should not favor selling strategies. You should favor buying strategies, and you should buy deep in the money calls with lots of time and a delta that's fairly high.
I love stocks near the all-time high. There's all these, people have schools of thought where you get these beaten up stocks and it's like, okay, it has a long way to go back. The problem with that is that at various levels on that road back, right? So let's say you have a stock at 200 now, but it used to be at 400. At various levels, you have all these people that have been holding that bag. And so the moment they break even, they're going to try to get out. And because it's a psychological thing, right? Where you buy something at 300, it drops down to 210. Now it gets back up to 300. You're so relieved that you're finally even on the position. You don't hold it anymore for the profit. You get out. And so when you have all these bag holders at various levels, you have all these opportunities for these sellers. But when you have stocks near the all-time high, you don't have bag holders there. Anyone who bought it is either in profit already because they bought it before that price, or they're even. So you don't have, other than the reason of I'm going to take profit, which is always going to happen, but it's not going to happen on a mass scale. You have a clear runway of no bag holders up there, so you have less resistance on that stock as it continues to go. So I love all-time high stocks. That's where Qualcomm is living right now. And I think you're right. I think it's only a matter of time before it just breaks on through there and continues on the next leg up.
We have a question. Pete and Harry, could you please do a video on how to day trade options? Day trading options is no different than day trading stock. You have the same principles that go into the trade. You did mention LPTE, low probability trading environment. So let me address that. A low probability trading environment would be like yesterday, where we're trapped inside of the prior day's range, like that. This is not a good environment to day trade options because you don't have liquidity in the options. You've got a fairly wide bid-ask spread to make up. You're better off being in the stock because you can buy bids and you can sell asks when you trade the underlying stock. So LPTE basically means don't trade options, don't day trade options. When you do day trade options, you're very limited as far as the stocks that you can pick from because the option liquidity is inferior to the stock liquidity. So now you're only looking at maybe being able to trade a couple of hundred different stocks that have decent bid-ask spreads. The slippage between the bid-ask is much, much more difficult. So when you're getting in and out of these positions with a wider bid-ask spread, it means that you need to have staying power. You're not going to be in and out and in and out. You're going to be in, and you need to hold that position for at least a few hours to be able to offset that slippage. Well, if you don't have any movement and it's just back and forth chop, you're going to get chopped up. So you shouldn't day trade options when you've got a sideways market, inside day, low volume. You have to wait for days like today. New high of the day through the prior day's high. Okay, I can work with this. So you must identify when you have this type of market strength.
Someone asked here, thoughts on Dell after earnings drop, but at the moment, trying to hold the 50 SMA, please and thank you. It's an interesting question because, this is more of an advanced kind of trading question. And the reason I say that is if you look at Dell, obviously you've had this huge drop off of earnings, right? I mean, this thing was up by 180 and now it's down almost 43 points from that. Okay. So you have this negative report. But you see attempts, including on the day after earnings, the day after that as well, of trying to break through two very strong levels of support. The first one being, of course, the SMA 50. The SMA 50 right now sits at 131.57 several times, including yesterday, the day before the earnings day, and kind of today where it went down to 132.95. It tries to break that. It can't. The other one is if you draw an upward sloping trend line from the bottom of 419 and you get 1, 2, 3, 4, 5, 6, almost 7 contacts, that line also comes in right at that 50 SMA. So one argument you could look at this and go, okay, this thing has not been able to get through two very heavy levels of support, which means institutions which are driving this are well aware of where that support is. They are well aware of that it hasn't broken through. And so the question now becomes on Dell is how long does it have to confirm at that support level before there is a convincing argument that, yes, this is going to stay above the 50 SMA, in which case you will see some buying going into that stock. The conservative way to look at it is the drop off of earnings, drop that stock down to a gap of 144.80. That's where your gap begins. So if you want to really be conservative about it, what you do is that is your confirmation point. The moment it gets into that gap, so at 145, it has now entered into that gap at $7 away. Now you could say the stock is starting to recover, and it's already into back into a gap that happened on Wednesday, May 15th, where it had a nice pop. So that gap is being filled. You really want to see the gap from 531, May 31st, that earnings gap started to be filled there. But I see what you're seeing. I see what you're thinking. Yes, there would be a huge argument there, yes, to say this is entering bullish territory. I would just wait a little bit on that confirmation.
The other thing that you'd like to see is a very nasty day in the market where you get a long red candle and where Dell holds up beautifully above that 50-day moving average, doesn't budge.
Mm-hmm.
That would show you that any sellers who still have stock to go would be selling it when the market is down, and there are buyers meeting that selling pressure. That's another sign that support is starting to form. But yes, after a negative reaction like that, you want to give it, I like to give it 5 to 10 days. It varies from stock to stock, but that's just a general guideline. Right now you've got 4. You need at least a week, another week's worth of data to say, yeah, this looks like a decent support level. And in that time, you might get one of those bearish days in there where you can confirm that, yes, there is support in Dell. Then you can move forward. You wouldn't need to be aggressively long. You could sell an out of the money bullish put spread keying off the 50-day moving average, or perhaps even going a little bit below that. Give yourself some room.
Yeah, and Pete's advice on waiting is well taken there too, because think about this. You know, you're an institution, you see the earnings report and you go, okay, we have a $500 million, billion-dollar position in Dell. Close it, get rid of it. They can't do all that at once, right? They just can't. There are rules. So they're going to stagger it. They're going to do it on the dark pools. They're going to slowly, get rid of the stock. So that's going to take time. That's going to take a week. It's going to take 2 weeks. They might see that 50 SMA holding there. They might have already sold half their position or whatever by now. That caused some of that drop. And now they're saying, all right, hold on to the rest and wait to see if that 50 SMA holds. So you could still have a big sell order sitting out there waiting on that support level to hold or not hold, which is a bit of a self-fulfilling prophecy, because whether or not it holds or not holds is dependent on them selling that support level, their shares. But institutions don't just buy and sell all of their position in one go like we might as a retail trader. They have to stagger it. And you don't know how that's being staggered on a stock like Dell based on the earnings report.
We have a question. Harry, why did you buy the high of the day on PLTR instead of waiting for a pullback?
Because PLTR has spent all day at the high of the day. This is a stock that hasn't pulled back. The market had several moments, before this, these last 5, 10, 15, 20, 30, 35, 40 minutes, where the market has popped up. But before that, the hour or so before that, the market was on a little bit of a downtrend. And look what PLTR did. It didn't pull back. So this stock, which has spent all day at the high of the day, tells me that I could wait for a pullback, sure, but I do not think, there's certain stocks where you look at and go, all right, this thing's going to come back and test VWAP. I see no indication here at all, unless we get a big market pullback, that PLTR has any desire to test VWAP here. So that's why I went in when I went in.
And the other thing on PLTR that you'll notice is here's the 5-minute chart from the day before. Notice how nice, tight, and orderly that price action is. That's a sign that there's strong buying in it, and the stock is not doing this up and down and up and down and up and down. You have stocks that have an upward sloping trend line, but that are jagged like that. When you see that type of pattern, you absolutely want to be out there buying dips. When you've got nice orderly price action like this, you're not going to get many dips because the institutions are in there gobbling it up. And by the way, why would I expect a dip when the market is continuing to march higher? Nice stacked green candles to a new high of the day. We're also through some technical resistance. I'm just going to put up an hourly chart. You had this resistance level right in here that the market was able to break through. And now it's very close to challenging the all-time high. So it's got a nice head of steam today.
Really
good question,
does.
though.
I am currently in by the way, an SRPT put debit spread. And the reason I took it is the bid-ask spread was so wide. I took a $5, a $3 bid-ask spread, a spread on the stock on a 119 to 116. and just put in a price of 90 cents to see if it would hit. Obviously, you want to get that for $1.50, right? Normally. And it clicked. I got it for 90 cents. So because I was just able to take advantage in SRPT, which up a little bit today, I still have 11 of those contracts, but it's retracing right now at a really good price. And sometimes you can do that with spreads when you have these kind of really wide fluctuating bid-ask spreads on a stock, because it's just extremely volatile. You don't have a lot of volume, maybe. SRPT is going to be a very volatile stock. It's very news dependent. And I was able to get the price of that, at 90 cents. So I just put in a price, see if it clicked. And if it didn't, I wasn't going to take the trade. It happened to click and I got the trade. You can do that sometimes when you have these really kind of all over the map bid asks. Let's see here. I can tell you a mistake I made. Pete, I think you froze. Are you there? Oh, there you are.
I am.
I can tell everyone here a mistake I made. Stupid mistake. Really dumb. But we'll fix it. I'll fix it. It'll be fixed. So SMCI. Obviously, I went in when Nvidia earnings, and it retraced. It retraced quite a bit. I have 15,000 shares of SMCI. I've been using covered calls, made up around almost $20 off the price point of it. So my current price point, break-even price point, is around $8.59 on the stock. But I mistakenly sold the 800 covered call yesterday, and it was supposed to be the 840 covered call. I went in with the 800 covered call, and it was sort of an unforced error on my part. It may still work out fine if I can get out of that call at break even. If I get a pullback here on SMCI, I will gladly take it. I don't want to get called away at 800. You never sell a covered call if you're not okay getting called away at that price. And that was the mistake on SMCI, which is, no, I'm not okay getting called away at that price. So now I just have to wait for a pullback, get out of that covered call, and then sell one at 850. But sometimes you go in and you do it so quickly, and yeah. So that was an unforced error there on SMCI. I just definitely need a little bit of a pullback on the stock to get that to get rid of that call, and then be able to enjoy the gains that apparently SMCI is starting to have.
The good news, and there's not a lot of good news on it, is that you've got the stock in a D1 downward drift. And so right now you still do have that 100-day moving average and AVWEB-E providing some resistance, and it has not exploded higher today with the likes of AMD, TSM, Nvidia. So that tells me that relative to the group, it's not quite ready to lift off yet, and it's pretty choppy. And I think you're going to get your opportunity to reel those back in. But hey, we've all made mistakes like that. They usually don't turn out well. At least that's been my experience. I've had a couple of them where it's like, oh, wow, that one worked out, and it shouldn't have. Usually they work against you. Usually they do.
And Nvidia, by the way, don't forget, is splitting next week. I believe next Monday it'll be a split stock, so you'll see Nvidia at 120. There's all kinds of historicals on what happens to a stock after split. Sometimes you do have a sell the news, sometimes you don't. You could argue that when Nvidia is at 120 or whatever it'll be come Monday, that all the retail traders that wanted to be in on Nvidia now have their shot to get in on Nvidia, right, and buy it at that price. You can also argue that people bought it going into the split, and then now the split happens, they're going to sell their shares and take the profit. There's, to me, if you are in profit in Nvidia, it pretty wise maybe take profit now while it's at this 1200 resistance. Certainly maybe take profit by Friday before you go into the split. And then, look, it's not like you're not going to have another chance at Nvidia after it splits to go in at the 120 or 100, whatever price point it's going to be at. And even if it goes up on Monday, you still have a chance to play the price action. So it's just it's an unknown event going into Monday. I would, if you have profit in Nvidia, I already took my profit today. I took $40 in something share profit on Nvidia. I bought it at 11.47 2 days ago. So I'm happy with that.
I have a fun little tidbit piece of history from the late 90s during the .com tech bubble. I was on the brokerage side. We were an execution firm specializing in options. We had institutional order desk and retail order desk. And so the play was that as soon as a company announced a stock split, people had pagers and they would get paged that Microsoft was splitting. The next second, the phone would light up, and we had so many people buying calls. Didn't matter. That's all they needed to know, was that the stock was going to split, buying calls and making a boatload of money because the market was in such a strong move higher. It was incredible. I've never seen anything like it. We haven't seen stock splits like that. And I mean, with the move that we saw in the late 90s, stocks were moving so quickly that they would split, sometimes even twice in a year. It was incredible. But yeah, to have pagers and then just blindly, buy these calls, buy, what's it, 2 strikes out of the money, 2 months out. Yeah, buy them. How much are they? I don't care. Just buy them.
I mean, it's decreased in recent time, but I remember when Amazon split. Remember when Amazon was like a $3,000 stock? There's a lot of stocks that are now being rumored for potential split coming up, from Melly to SMCI, a lot of those, stock splits generally is an indication of strength and in the investors love them. They're just not as prominent as they used to be, as a lot of these stocks would run to a cost prohibitive level. Someone asks, what criteria do you look to know a stock is overextended and you'd be smarter to wait for a pullback versus buying a new high? I tend to look at, I like the 8 or 15 EMA, and those EMAs have a slope to them, right? You can see a steep slope or a gradual slope, whatever the slope might be. And you match that slope to the slope of the price action, right? And so if there's a huge kind of divergence between the two slopes, then that's an indication of there might be this sort of regression back down to a mean, back down to the EMA. So, but if those two slopes, are in line with each other, then you have, no matter how much the stock keeps going up, like Nvidia, the slopes, Nvidia keeps going up, but the slopes are not divergent from each other. So I tend to use that. Do not use RSI, certainly, in any of this.
There's a question. You haven't found anything in OS chat policies regarding posting paper trades in the chat. Is it encouraged? The main thing is that you understand the system and that you're finding good opportunities and good stock picks that fit the system. Then you can post. We don't know if you're doing a paper trade or a real trade, but if you're just kind of poking around thinking maybe I understand the system, we would prefer that you don't post. More is not better. We really want the trades in the chat room to conform and to be of the highest quality, because that's what helps all of the members.
Correct. And don't lie. I mean, paper trading is fine. In fact, it's part of your training. If you're training to learn how to trade, part of the steps in doing that is hitting those milestones, paper trading. So nothing wrong with paper trading. It's all about the quality of your trade. But don't say you're trading real money if you're paper trading, right? Just say you're paper trading. Don't be like, oh, I made this amount of money today and it's a paper trade. Just own up, say it's a paper trade. Nothing wrong with it. It's about the quality of the trade. And by the way, these things can be checked. You say you bought a call or a number of calls, you just go to the time and sales in any broker and you can see, did anyone buy the call? And if it's not there, you get a pretty good indication, okay, that person posted a paper trade. So I have no problem with people posting paper trades as long as the trades are solid trades that fit the system, and as long as you don't lie about it. You don't have to say specifically paper trade, but if you don't say, hey, I took this amount of profit and it was real money if it wasn't.
I have a question for you, Harry, on Melly. Hi, Harry. I saw your Melly play. Is this a dip buy? I'm having a hard time reading the chart.
I wrote when I posted that, I didn't even post it in the chat room. I posted it on Twitter. I said very clearly, this is a fundamental play that's based off of the 100 SMA that Melly has not yet broken through. And you have this sort of gap up from earnings, and you had no news event to change the price point. So it's a fundamental play. I didn't buy it. I bought 1,000 shares there. If it breaks through that support, I close it. I take a small loss. If it breaks through and it continues up and bounces off, I can add to the position and average up. So I just saw it as a starter position on something where my sell point is pretty close by and there's a lot of upside. It's like I said, it's more of a fundamental trade with a little bit of technical analysis in it, but not a lot. But there's a reason why I didn't post that in the chat room, and I posted it on Twitter instead.
And let's see here. Janan asked, do you guys have any thoughts about things like MNST Dutch auction? Should we be paying attention to them? Being aware that the stock has any kind of stock that they're offering is always important. But again, just follow price action. That's all you have to do. If you look at MNST, there's no reason for me to buy this or to short it right now. If anything, I would be leaning short side because the stock is in a downtrend, hasn't been able to rally with the market. It's down below this horizontal was support, now is resistance. So it still hasn't even gotten to the point to where it looks like it would be of interest on the long side. It's below a downward sloping trend line. This stock has some work to do before it becomes of interest to me on the buy side. On the sell side, I would be looking for some type of test of this low and a breach, and then I would certainly feel comfortable shorting it. So just if you pay attention to price, that's the most important thing that you can do. The institutions are aware of Dutch auctions. They're aware of everything. And when they see something that's worthy of trading, they're in there, they're active, and those stocks will start coming up on our searches and you'll see the volume.
All right, we got some good picks here. We got PLTR. We have Qualcomm. So we got some good picks for people. Obviously, next Wednesday is going to be a very volatile day in the market. There's no doubt about that. I do have some quick questions. How to find currency strength correlation? Not sure. Can you clarify a bit what you're asking there? I mean, if you're talking about the value of the dollar and how it correlates to the market, or are you asking about something more along Forex lines? So if you could just clarify that question. What's the best way to trade Lilly options when the premium is so high? Use spreads. Simple as that. Use a call debit spread if you're going long on Lilly, and that mitigates against the price of the options. And then finally, DLTR has been shitting the bed, as they say. For a while, 120 puts, 120 strike puts a few weeks out seems like a decent trade. It's okay. I mean, just keep in mind, DLTR does have, I wouldn't say strong support. It has a little support here at 112. It's a horizontal support that runs across. It hasn't been able to get below that. Whatever the reason for that support level, it's there. It is not breaking through the 50 SMA. It probably will break down from here, but I would just place an alert at 112. And then if it breaks that, then you have your play.
I do have a question on the buy and sell signals. Are they part of the new version release for Option Stalker Pro? I'm still testing them. I'm working on them. I have a different set of buy and sell signals for SPY and QQQ. I'm just going to go back and show you some. I'm going to go back in time and you can see how they've done. It's not 100%. It still does require some interpretation and price action, but I'll just move forward from here. You can see a sell signal there. That's a buy signal you would cover in there. It's got a big gap down. So we're just take a look at some of these signals. When you get into a sideways market, you don't want to be following any trade signals. This is a low probability trading environment, so it means keep your bets small. And there you can see there is a small loser right in there, another small loser here, but eventually the system gets online and produces some very nice signals in here. So you've got to kind of weed through some of those periods. Like in here, you get a sell signal. Now you have a buy signal. We don't have any confirmation. You don't have a rally through this horizontal resistance level. So you wouldn't take that buy signal until you get something like that. You just stick with the sell signal. Then you get some follow through there. Got a really nice buy signal here. You're out in here or anywhere along the way. And then I'll just conclude in here. So I'm testing all of this. I mean, it's on a really nice buy signal right now. The other thing that you'll notice is here, I've got a number of the signals on different time frames for SPY and QQQ. So I'm also working on a matrix so that you can see how these, I've got different signals. You can see how multiple signals line up across multiple time frames for SPY and QQQ. And guess what? When they all agree, you got a really good trading opportunity. So yes, I'm still testing it. I hope to release it in the next few weeks. It's not perfect, but it's damn good.
The ever improving option stalker, and it's just, you know, if you just go in for the searches alone, that's one thing, but the constant improvement on all the signals, everything you have going on there, constantly being built up, it's great. So I know you put a lot of time, effort, and work into that, Pete, and it definitely pays off.
I do. It keeps me up at night. Sometimes I wake up and go, oh yeah, what about this? What if I did that?
Unless you're broken down in the middle of the woods without an axle.
You know, that's the blessing in disguise, was I didn't think once about the market. I was thinking about, am I going to come out of this alive? Are we going to find our way back home? Crazy. So, all right, should we wrap up? I mean, we don't have any
I think
questions.
we're good. Everyone's got their picks. They got some analysis, and they know what's coming next week.
All right, next week, yes, will be a big one. So everyone look for, we got a chance to break out to a new all-time high today, which is nice. Know that we've got the jobs report coming out on Friday, so that's going to produce some market movement. And then we probably go into a fairly dull period into the FOMC statement, and then we'll see what the FOMC statement can produce. If it adds to the current gains and we break out to a new high, all right, I can go with it. And there we are, very close to it right now. Thanks, Harry. Thanks, everyone, for watching. We will see you next Wednesday.
Until next week.